Good morning, it's Jeffrey Cohen. July 14th, it's Thursday, day before options expiration on the individual stocks. Um, so what are we going to talk about today? So first off, I'm Jeffrey Cohen, investment advisor representative with U.S. Advanced Computing Infrastructures, Inc. We're an Illinois licensed and registered investment advisor. We work with clients on a non-discretionary basis. That means we sell services, we sell advice. We do not take your money and invest it for you. You invest your money, and we help you to do it a lot better with information. So, one of the things I thought about doing was sharing our model run this morning, but there's just so many things going on, it's worth it just to cover the bases first. So, real quick basis. Yesterday, the market did well in the face of a really, really bad consumer price index rise. So the consumer price index rose 1.3% in June versus May, and it rose 9.1% for the year. So I was explaining it to my 12-year-old daughter. Somebody broke our money. She's like, "Dad, what does it mean?" And I said, well, when you look at a $20 bill, we actually did, what makes this valuable? So one of the things is, in God we trust. And I said to her, does that make you feel confident? She said no. She doesn't go to church. She doesn't really think that's the thing to do. So I said, well, the only thing that really makes this valuable is that when you go to the store, someone will take it. And it's kind of broken now. So it takes 10% more of these to buy the same exact product. The same cheese, the same pen, some coffee mug, and the coffee that goes in it, rent, gasoline, a new car, my new sneakers. We bought me new running sneakers. Everything. The phones. The phones are going to be, 10% more. And so she asked me why it happened. I told her it's a really long story. But she said, wow, that's really bad because her sister has gone off on her own. Moved out of the house, graduated, and everything's really expensive. And they're really struggling just to put food in their mouth and to have gas in the car. So we talked about how the dollar was broken and now we have to fix it. And so that's such an interesting backdrop to what I'm about to tell you, which is the dollar is actually the best deal in town. So I can imagine her say, so Dad, if the dollar's broken, then why is the euro down to $1? If the dollar's so bad, why does it buy 139 Japanese yen? Now, I know it used to be $35 for an ounce of gold. I explained to her that you used to be able to bring money to a Federal Reserve bank. We have a branch in Chicago, and you could exchange it for gold or silver. And she said, well, is that better? I said, yeah. I said, because no matter what happens, no matter what crazy political scheme happens, or how many wars you get into, or anything, or just spending money and whatever, I said the government had to go out and buy gold, physical gold or physical silver, and put it in a place, and that you knew that every $20 bill, every 100, there was a little bit of money, a little bit of gold or silver sitting somewhere. And so if they wanted to print more, they had to get more. And so it stopped them from making more money. And then I explained to her, did you know that there's $30 trillion in U.S. money in circulation? She's like, wow. She's like, and the worst part, Dad, is that doesn't feel like a lot of money. And I kind of think of the Austin Powers movie where Dr. Evil asks for $1 million and they laugh. And then in the next movie, he asks for $1 trillion and they laugh because his numbers were off. Well, now, so I remember when President Reagan ran for office and he would talk about these government programs being out of control and they cost $50 million. for a year. And now we give money to Ukraine $1 billion at a time. We don't even think about it. Just for those maybe not so good at math, it's 20, 50 millions makes $1 billion. And Reagan wasn't that long ago. And so the idea that we've inflated our government spending by 20 times, just drop of a hat. Oh, you know what? Let's give Ukraine another 1.3 billion. Well, I don't think so. That's a lot of money. And what my daughter said is, Dad, $1 trillion doesn't seem like that much money anymore. This is why we have inflation, and this is why the currency's broken. But what I don't understand is why the Great British Pound is really weak against the US dollar, and the Japanese yen is weak against the dollar. And crude oil, one of the reasons I think that crude oil is falling isn't this whole demand destruction story. Let's be honest, we're about to be in an active shooting war with Russia, NATO versus Russia. Russia has shut off energy supplies for maintenance for Europe, and it wouldn't surprise me if people start taking sides here. But yet crude oil is down from 120 to 95. What that tells me is it's a US dollar thing. I want to hear Rand Paul telling me about the dollar being weak, but I think the dollar is very strong, and so it could be a race to relative safety. Let's talk about that race to relative safety a different way. Why are U.S. government bonds and notes yielding so little? So market's in trouble. Look at that. The futures, I didn't even look this morning. The futures, they're down 1.5% for the S&P 500. They're down 1% for the NASDAQ Composite 100. I'm guessing the IWM, the Russell, is down as well. Oh yeah, 1.57% for the Russell 2000 Composite. And so why are short interest rates up? Look at that 1-month Treasury bill gets you 1.64%. Do you know we might have to raise our risk-free rate again if this keeps up? Because what happens is when the 1-month Treasury goes up, then you just type in bankrate.com. So I don't know about you, but I love Bankrate because you can lose banking's high-yield savings accounts. And right away, you could see Brio Direct, Webster Bank, North America. That means it's a federal bank. So it's regulated by the... It's not Office of Thrift Supervision. Is it Office of the Comptroller of the Currency? Oh, that's great. They're really good. So here's the deal. For $1, you can go into the Ponce Bank. By the way, FDIC insured. So 1.8%. So my guess is you can earn 1.8%. Why would you bother fighting to earn a dividend, right? But you can earn more in a savings account than you can in a 1-month Treasury. Okay. And then why is the 10-year at 2.938? So, guys, I don't know if you heard the news yesterday. The CPI reading came in, and I just feel really strange about all this. To be honest, I really do. I'm so not comfortable. The Consumer Price Index went up 1.3% last month. It rose 9.1% over the past 12 months. So if you believe that that's going to be true moving forward, why would you take 3% on your 10-year money? Or 3.1% on your 30-year money? You just lost 9%. You lost 1.3% last month. We're not talking about 1.6%. Oh, I earned more than the 1.3%. I feel like I'm going insane. You lost 1.3% last month. This is an annual rate. Like, this is 1.64% for the whole year. You lost all of it last month, or at least 80% of it. I don't understand. Guys, we should be doing something about this. This is really bad, okay? And so we are in a high inflation mode, which means money is becoming worthless. So imagine when rents go from 2 grand. So my daughter just turned 19, living with a friend of hers. They're so happy. They're so happy, right? They bought an RV and are driving around and they live in parks and I swear to God, they're turning into gypsies, but that's cool. I mean, it's a thing you do now, I guess, with the RV or a bus, right? So whatever. Who am I to judge? I sit at home and I talk to you, right? I shouldn't judge. No one judge. No one can judge anymore, right? So they looked for an apartment and it was $1,500 when she was 17. Okay. They looked for an apartment last year and it was $2,000. What do you think it's going to be when they decide that the RV is passé and they sell it? And they want to get a nice apartment in Chicago. It's going to be $2,500. And I can just hear the conversation. Daddy, I don't understand. I go to work. I make the same amount of money. You know, it's a new economy, so you get paid piece goods, right? Delivering groceries or Uber or whatever. It's piece goods, right? Or I mean, she could work at McDonald's, or she could work at a store, or she could work in a factory or an Amazon distribution center. So then you find you make $25 an hour if you really work your way up. But most of those jobs probably pay like $15 an hour. So you're going to bring home $600 a week. You're going to bring home let's call it $2,600 a month. And then you're going to have to split a $2,500 rent check. Inflation causes poverty. Full stop. This isn't the stock market. I'm so sorry I'm talking about this stuff, but it's actually really important. President Biden sent a tweet yesterday that I thought was so disingenuous, and I'm not saying from a political perspective, but you know what he said? He said the CPI reading is out of date. He goes, it's unacceptable, but it's out of date. We've already fixed the problem. Do you know energy's up 41.6%? He said energy's down 40% last month. It's already done. We already fixed it. We're good. We're good now. And I just remember thinking, we're not good. Do you know I just bought a pair of sneakers like a week or two ago? I run, and it keeps me sane, and it keeps me in the stock market, right? So I run. You know, you have to change out your sneakers every 6 months or 500 miles, which I can't, because I run probably 4 or 5 miles in a day, right? That's 100 days. I'm not going to replace my sneakers every 4 months. But let's figure every 6 months to a year, maybe every year and a half, I buy new sneakers. So about a year ago, I bought some nice New Balance and some nice, Asics. Lots to choose from eBay, and they were all about $30. I love it. I bought it from the New Balance retail store. They sell their seconds, right? I paid $50 for one pair this time. The same store, same sneakers, effectively. And I paid $40 for another, but I had to buy it from an individual in Chicago who sold it to me from his house. He had one pair of sneakers, and I paid $40. So in order to not go from $30 to $50, I bought it from some guy's house, not from an official store. I'm just saying that prices are going up on everything that we buy. And so it will create poverty. Let me explain how else it's going to create poverty. I'm not using any of my prepared materials. We're going to go to the Fed, which is the Federal Reserve Bank of St. Louis, publishes data, total assets. These are the assets. This is the ammunition, okay, that the Federal Reserve Bank has built up over time. And we're going to start in 2008, because the story starts in 2008. In 2008, the Federal Reserve Bank had less than $1 trillion on its balance sheet. Total assets from the Federal Reserve Bank. Under $1 trillion. Now that was dealing with a rather tough scenario, right? Because we destroyed our banking industry, and so we had to pump liquidity into the market. And the best way to pump liquidity in the market, we found out, was to take little pieces of paper, little IOUs. I got one right here, by the way. I love America. And if you look inside, there's an IOU, and it says, I will pay you interest and principal. Okay? 30-year bond, 10-year bond, 20-year bond. It doesn't even matter. 6-week bond. Right? And if I take those pieces of paper and I buy them from you, I give you cash. Right? I take a piece of paper. I love America. I give you cash. I love Andrew Jackson. Boom. And I do that with $9 trillion. Now, in 2008, 2009 banking crisis, it went up to $2 trillion. And I remember thinking at the time that Rome was burning and we're all going to die and this is horrible and I can't believe they did it. And then it went to $3 trillion in around 2011. And then it passed $4 trillion on the way to $4.5 trillion. And I remember thinking, the money in my wallet isn't going to be worth very much at some point. But don't worry, because everything's going to be okay. And then it came down, and I actually felt good about it. It came down to about 3.7, 3.8 trillion. I think this is when the taper tantrum happened, right? Because the Federal Reserve realized they were doing something bad here. And so then all of a sudden we hit this little pandemic thing, and they just decided to pump up the volume. Remember that song, pump up the volume, dance, dance, do, 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 do. So they did it, 4 trillion to 7 trillion. And now since 2020, we've gone from 7 trillion to 9 trillion. So I want you to think about it. When you pump from 4 to 9, when you trump $5 trillion, you pump $5 trillion of liquidity into the market. And I believe we only have $30 trillion in money. That's the other part of this equation. That's 5 into 30 is 1/6 is 16%. We inflated everything by 1/6. Doesn't surprise me that we have inflation now. Let me make sure I'm right on this one. What's the M2? Hey, Fred? Hey, St. Louis Fed? What's the money? It's not even as high as I thought. Used to be bigger. Used to be $22 trillion. It's come down. Oh, yeah. 21.7, 21.75 to 21.75 trillion. So if I take a currency, which at the time, I need to go back because these need to match, right? So the currency at the time was 15, and we pumped 5 in. So we inflated the currency by 1/3, everything else being equal. So forget about dropping money out of helicopters and sending checks out. Forget about pumping stimulus. Forget about shovel-ready projects. Just think, just purely one aspect is quantitative easing. They took a $15.45 trillion currency, which had gone down to 15.2, which, by the way, was the right amount of money, because before the pandemic, we were smaller currency. We were 14.4. We hit 15.4, but, 15.4. And then we pumped 5 trillion on it. We inflated the currency by 1/3. Why is anybody surprised we have inflation? I'm not surprised. You shouldn't be surprised. What I'm surprised about is why mortgage-backed securities aren't completely in the toilet and why they have any power at all. Look at that. They're up. 2 ticks, 2 seconds. Why is a 30-year fixed-rate mortgage 5.72% when inflation is 9%? Well, the reason is that interest rates are 3%. So if interest rate's 3%, I could do a mortgage at 5.7. I make 2.7 points of margin. I'm probably going to charge you 2 points fees and points. So I'm going to make 5% on your mortgage. Just want you to think about that for a minute. I'm going to make 5% profit. I'm going to lend you 100 grand. I'm going to take 5 grand for myself. Of course, banks. Of course, Rocket Mortgage and Lending Direct or Lend LC is going to go up. Loan Depot. Because they're not lending you the money. I know Biden likes to go out and talk about, we need to really be careful here. But if 1-year Treasury is at 3.25%, why is a 30-year mortgage 5.72%? Why isn't that 10%? Eventually, when the Treasury rates go up, the fixed mortgage rates are going to go up and the housing crisis is going to happen and the housing prices are going to crash. Because if you already own your home, it's fine. God help you, you have to sell it. The person that buys it from you probably doesn't have $1 million. $1 million for my kingdom. So they're going to borrow 900,000, and they're going to pay 2 points, which is 18,000, and then they're going to pay 3% or 2% over the bond rate, and it's awful. They're going to pay points. They're going to pay PMI for homeowner insurance. They're going to then pay property tax, which has gone up. And this $1 million mansion. By the way, I have a 700 square foot office in my home. I love this place. It's going to be 500,000. God help me if I took out a loan on the value of the million and put it into Bitcoin or the stock market. God help me if I did that. I didn't, by the way, because then I can't pay the million. I just painted you a gloom and doom story that tells you why the stock market has to go down. So did the stock market go down yesterday? Well, it sure looks red today. I guess people were asleep when the CPI report came out. Look at that. It's blood red. Everything's red today. I haven't even looked at individual stocks because at this point, I'm so shocked. I'm so shocked. I'm so puzzled. We broke our money. And we have a president of the United States saying it's out of date. The data's out of date. Let me go see if I can find it on Twitter. Oh, something went wrong. Try reloading. I don't think they want me on Twitter right now. Let's see. Who's they anyway? Where's my Twitter? Nope. Nope. Sorry, Jeffrey. You're not allowed on Twitter this morning. Wow, is that crazy? All right. Can't go on Twitter. So what the president said was, oh, it's obsolete data. It doesn't matter. Not going to count. So the Russell 2000 to 1700 isn't even close to support. I mean, this thing could just plow through 1650 like a hot knife through butter. The Nasdaq, if we let it, recent low at 11,100. You got 500 points. It's no problem. It's only 4%. This thing could definitely test some new lows. And you look at the S&P 500, and this is the most efficient, the best place to put your money if you have to be long. If you have to be long and you're not a stock picker, this is where you want to put the money. If you're really good at stock picking, then you don't want to put it here. You want to do what I'm doing, and you want to play the games and all that. But so this is your good place to put money if you're safe and you're not an active investor. And look at that. And it has tested 3664. It's about 90 points. So this thing's got 2 to 3% to fall. I wouldn't be surprised if we see it. So we're in a committed downturn. The futures are calling for a 1.5%. Remember I said it was like 2 to 3% down for the S&P to hit new lows? It's calling 1.4% down this morning. So how did we do yesterday? Well, what's interesting is my new high, new low breadth indicator is definitely staying consistent. I call it bad breath. That should be the name of my live stream today. Is bad breath. 24 new highs, 595 new lows. But you got to look at fixed income because it's about stocks and bonds, right? So where are we at? Stocks and bonds. So 40 new highs, corporate bonds yesterday. We had 40 new highs. We had 716 new lows. So that's not bad. That's actually 18 to 1. Ah, we're loving life. It's only an 18 to 1 negative breath on the market. Whereas this is 19. All right, fine. So consistent. Stocks go down, bonds go down. Stocks go up, bonds go up. I know that's not what they taught you in your MBA program. They taught you that they're contrarian bets, but it's not true. Bonds go down, they drive stocks down. Stocks go up, they can drive bonds up. Now we're going to talk about banks. We're going to talk about banks because I'm in banks. I love banks. By the way, Bank of Hawaii pre-market down 0.4. What's interesting is Bank of Hawaii fell and Lakeland Financial fell. Those are the banks that we weren't confident about. But the funny part is what's protecting them is this. The fact that the U.S. Treasury note yield, the yield is down below 3%, is helping these banks. Because these two banks in particular, Bank of Hawaii and Lakeland Financial, they borrow short and lend long. A lot. That's not a good bet for when things melt down. They're also in mortgage-backed securities. Look at that nice curve down. But it could get worse if people stop paying their mortgages. What else we got? Jeffrey, talk to me. What do we got here? So, Jeffrey, are the markets falling? Are we in trouble? Let's look at over a year. Over a year they did. They tried to rally, although the Russell really didn't try that hard. And now they're down, and now the NASDAQ and the Russell are pretty much at parity over the past year rate of change. Go 5 years. 5 years, we're still doing great. You could look at this and say we still have room to fall, but we're still doing great over 5 years. You're up 100% on your money. S&P 500, you're up 55% over 5 years. That's beautiful. That is a thing of beauty. But 5 days, not so good. Consumer discretionary stocks were up yesterday, and industrials were down. Now, why would industrials be down? It's because we're heading into a recession. And in a recession, you don't make stuff. You don't sell stuff. You can make stuff all you want, but you're just going to put it to inventory. So where are we with the early morning stuff? Coal. Pre-market coal is down 4 to 5. The walking wounded. Stocks that have been downtrodden. They are down pre-market, with the exception of 3 stocks that are up less than 1%. Downtrodden, continue to be beaten down. Regional banks. How we doing? We're down. Except for National Bank shares, which is up 5%, and First Republic Bank, which is up almost 4.5%. My guess is those are reactions to yesterday's action. Let's take a look at the money managers. Always good for a second order effect, because if the market goes up, the money managers make more money. If the market goes down, money managers lose money, and money managers hold some risk of the investors that are in. You've seen some bankruptcies recently, right? And so when they go bankrupt and they're holding counterparty transactions, then these guys could be in trouble. So Bitcoin as well. So these guys, they like it when the market goes up. So Carlyle Group, it's going to break $30. I'm so sorry, Carlyle. Blackstone, it's going to break 90. Morgan Stanley, interestingly enough, has kept its power. Good job, Morgan Stanley, right? B. Riley, not so good. Probably going to break 40. State Street, not bad, holding its own. KKR, holding its own. Raymond James, holding its own. Bank of New York Mellon, holding its own. BlackRock, holding it. So it just depends, right? You know, Goldman's down a little. Schwab's down a little. Franklin Resources is actually holding its own too. I know there's a lot of insider buying for Franklin Resources. So the money managers are not in trouble. They are not downtrodden. They just have bad days and good days. There's a lot of volatility in the money managers. I think as people understand that effect of markets and money managers, you know, retail's down. Rent-A-Center's up. Rent-A-Center is like a Geffen good, because as people get thrown out of their homes and they have to get a small apartment. A lot of times they rent the furniture, or maybe government agencies rent the furniture to put people in when they need help. So Rent-A-Center is up a little pre-market. That's not necessarily a good thing. Victoria's Secret's up a little. That's always nice. Flex Steel, I feel bad for them. I love the company. It's only down $1 from the 50-day moving average. I just don't know that any of these are good at the price, right? So that's the problem, is good companies, I'm not sure good stock prices. Cannabis? Not bad. 50-50. Not bad on cannabis. Chips and dip? Semiconductors? All down except for advanced micro devices, which is interesting. That's a big one. Trucking and transport. I guess three trucking companies aren't doing badly, maybe 4, and probably because gasoline prices should fall with oil prices, and they might not be hedged so much, right? So people might be playing the game of who's hedging and who isn't. This is always interesting, right? Your physical miners are down more than your Bitcoin miners. Love that. That's why I put them together. You have physical miners and you have Bitcoin miners. You look at them together, they're all down. I don't care what you're mining. Gold, copper, Bitcoin, steel, or iron ore. But here's the thing, but not down that much. Now, Vale's down. But that's also, there's a currency issue with Vale. So I like Vale, and I really think that this whole group of mining stocks has a lot of value underneath them. There's a lot of intrinsic value. They make something. So what is Brazilian real per dollar? .18. So that's 5 point something. Let's go US dollar to real. 5.45. When I went to Brazil to do business as an IBM executive not that long ago, it was 4. That's 5.5, right? And so Vale, the profits that they earn aren't worth as much. I get it. Right? We're not stupid, guys. We're not. We're pretty smart, right? But you can't do anything about that. It's a currency of another country that has their own printing presses. And so here you go, you buy Vale, right? You think you're going to have it for your kids and everything else, and then they tank the currency. And by the way, and then the recession hits, and it tanks the selling prices. Yeah. So what do we have today? Are we going to make any money today in the markets? Is there anything that looks good? So pretty much everything is down in every sector that we look at. What about the current efficient portfolio? These are the stocks that are model picked a few days ago, not today. I can tell you what we picked today. I got them right here. Maybe I will. Maybe I'll show you. Maybe I'll walk you through a little. Some facts. Love that. Love facts. But basically, you're in the toilet right now. And so, market's down. Do you believe it? That becomes the question. Is this just a big fat head fake in the summer because we lack liquidity? If you look at the market yesterday, we look at the NASDAQ and the S&P. The market opened lower, right? So everyone was gloom and doom, and then it clawed its way back to parity. That's what that dashed line means. That's where it closed the day before. So it made its way back to parity, and it rode parity all day. S&P 500 made its way back to parity, but then it couldn't hold. Didn't hold, right? Too much money flowing. NASDAQ did okay. So here's the thing. Do you believe it? Do you believe that we're going to fall, or do you believe that we're going to hang tough to support? I don't know what I believe anymore. Just to be honest, I'm not sure where I'm at. And so Let's talk a little bit about what the model said. Maybe we're going to wrap it up. So the first thing the model says is that the variance of the S&P 500 is 1.58 times 10 to the negative 4. Is that good? Is it bad? I don't know. Let's take a look. I don't remember numbers so well sometimes, right? So we're going to take a look at our research. I did a little research on variance. By the way, I remember. Don't worry. Let's see. Scroll on down here. S&P 500. In May, the variance of the S&P 500 for a year was 1.2 times 10 to the negative 4. We're now at 1.6 times 10 to the negative 4. That's 30% higher since May 17. And actually, in June 8th, it was 1.3. June 24 is when it really hit, up to 1.6. And that's where we're at now. So we're flat since June. Variance of the S&P 500. So I remember showing you the chart. It looked a little bit wobbly. It's fine, right? Then we look at how the indices are doing over the past year. This is where comparables matter. So the S&P 500 is down, excluding dividends, down 12.5%. The Russell's down 23.5%. The QQQ is down 21%. Dividends are about 1%, so or less, so it doesn't matter. So market's down. So let's take a look. What else we got here? Oh, by the way, I increased minimum volume to be in our club here, our analysis. You had to have traded 5,000 shares every single day for the past year, or 253 trading days. You have to have a market cap right now of $5 million or more. You can't trade today, you can't have closed above $10,000 or below 35 cents. You have to be a United States of America company. You have to be actually based in the United States of America. The number of stocks that traded in the U.S., in the United States in exchanges is 10,982. So if you were wondering how many stocks, how many U.S. listed bonds, how many ETFs, how many business development corps, how many of all those traded, it's just under 11,000. We found 2,454 that passed our first screen. Beta. We don't allow a beta over 4.5. We think it's an anomaly. And we don't allow a beta that's under 0.001. Just because we can't handle negative betas. Negative betas don't make sense. Volume spike. If a stock trades more than 50 times its average, we plot it separately, right? So we go through and we look at stocks and we find... So by the way, Georgia is not the country. Georgia is the state. For some reason, the state of Georgia allows its companies to list its country as Georgia. What do we have here? I mean, if I blow this up a bit, you can't read it, but it's sorted nicer. By the way, this is wrong. Unicure, NV, or NXP Semiconductors, they just don't have a country. So they're out. Your largest beta is Silvergate Capital. Your lowest beta is Kellogg. Just so much to talk about. Expected returns. Your largest stock expected return is 2.2. I'm sorry, is 12%. Your smallest is 2%. So there are stocks with massively varying betas. There's two people watching. Hello. This is our CQNS uprun from last night. Please ask questions. The power of our run is starting to tweak up. That means return versus risk. So risk must have come down just a little bit relative to return. We're still under 3, which was our default setting before the pandemic. Expected return if you held all the stocks. By the way, 2,000, exactly 2,000 stocks passed validation and are crunched in this run. The variance of those 2,000 stocks is 1.876 times 10 to the negative 4. 1.86. So what's interesting is if we look at raw variance, it used to be 2,160 stocks were profitable and were trading normally. That number has dropped to 2,000, even though we removed the floor of market cap. That was a market cap of $250 million. We now have a market cap floor of $5 million. So we're sucking in every company we can. There are just fewer stocks to trade, and there are fewer stocks of companies that make a profit. That's actually insightful in and of itself. So in May, that number was 1.4. It's now 1.9. In June, it was 1.5. So what happened? June 24, 1.6. July 6th, 1.6. July 11, 1.9. So what this tells me is we have a very, very recent increase in price volatility of your typical stock. Stocks are going haywire. That's another way to say it. Stock prices are moving in a much more erratic pattern in the past few weeks. Okay. Thank you, Jeff. Good to know. Here's the best stocks picked by our model. These stand alone if you can only hold one stock. Not that anyone would only hold one stock, but if you can only hold one stock, the best risk return is Well-Built, Amphenol, Emitek, Berkshire Hathaway. When the model starts picking Berkshire Hathaway as the best stock, it basically means run and hide. P&M Resources is the public regulated electric utility of New Mexico. Crestwood Equity Partners, which is down dramatically. Marsh & McLennan, a insurance broker. McDonald's, Pepsi, Microsoft, Apple, Arthur J. Gallagher. I want to remind you that the minimum market cap to be in this list is $5 million. And yet, it's the large caps. It's the large, safe companies that are being picked by our model. That's never happened before. Never. This is a crazy market. Ugh. When your top stocks, your big stocks, your safe bets are the ones with the best risk return profile, not your high risk, high beta stocks. So the model has switched gears, responding to a market that is sick, that is in a bear trend. The other thing I know you guys like, I know you like negative beta stocks. So let's take a look at some negative beta. I got high beta, I got low beta, and I got negative beta. Now the funny part with the negative beta stocks, and I'm going to show it to you for the down run as well, is that there aren't very many. So of course, stop it. There we go. Of course, gold, physical gold, is a negative 5.3% beta. Physical gold. Your short QQQ 3 times is a negative 378% beta. Your negative bear small caps, TZA, negative 3.3. The dollar, negative 11% beta. Your VIX, your ultra short VIX, almost a negative 5 beta. Your just regular short VIX, negative 3.2 times beta. So you really only have 2 companies here. You have V2X and you have Elevance Health. There's 2 negative beta stocks out of 2,000. Okay? That is what I call anomalous behavior. Now, I'm going to show you the picks at the stock that were picked, the portfolios that the stocks were picked later. fact, if you really want to know the stocks that the model picked to buy today, to buy and hold against the S&P 500, or to short, I guess if you think the S&P 500 is going to crash, jingle jingle, right? Negative beta. How much is beta? There we go. Negative beta stocks. These are a down run. These also have a $5 million market cap floor. These do not have to make a profit. These do not have to be U.S. listed companies. These are the dogs. It's fine. So what do we have? We still have AAAU, which is fine. Now you have Advent Technology Holdings, which is a quarter negative beta. You have ADTN, Adtran, which is effectively zero beta. Blue Knight Energy Partners, 11% negative beta. Hussey, HUSA, Houston American Energy Corp, is down. It's basically a 0.5 beta. And then EcoArc Holdings. I hope it's not building Noah's Ark and waiting for the floodwaters. Negative 0.38 beta. So 38% negative beta. So you got like what? And I'm going to guess there's like 1,000 of these stocks. So you have 1, 2, 3, 4, 5 negative beta stocks. How many do we have? And we'll take a look at the variance too, just because it's good. So we have 1,400. Wow, that's high. We have 1,438 stocks that lose money, companies that lose money. So you almost have more companies losing money than making money, and we haven't even seen the effects of inflation on Q2 earnings. So, by the way, how do you make the stock market go down? You lose money, right? You have your companies lose money. So the the variance of these, so by the way, you do earn a little more. So if you were to hold these 1,438 money-losing companies, your expected return is 6.14%. You are compensated more highly on an expected return basis if you buy dogs that lose money. Now let's take a look. It used to be there were only 813 stocks that lost money in our model. Now there's 1,438. More stocks lose money. Okay, that's interesting, Jeff. So it started off, we were at 4.3 times 10 to the negative 4. By June 10, we were still at just 4.4. Then in June 24, we popped to 4.7. They'll still start with a 4. July 6, 4.8. July 11, 5.3. And now we're there as well. And the number of stocks is lower. So some of these stocks have just dissolved or disappeared, which is interesting. So we're at historically high variance. It's not helpful. It's not helpful. So where are we going to be today with the market? So we keep running our model, we keep tuning it, we keep making it better, we keep finding that edge. And we did find a little edge in the market today. We did. The problem is that if the S&P 500 is going to fall, then our model picks are going to fall. Now, the futures are starting to recover. They're not down as much. You can see that there. Silver's down to 1841 pre-market. Gold down to 1708. Oil's down to 95. The currencies, you guys know the currencies have all just crashed against the dollar. The dollar is king right now for the currencies. And I do believe it's because no matter how bad it is in the U.S., it's better than everywhere else. And if you have money and you're wealthy and you're a company that invests money for your investors, and you have to stay invested, you're a pension plan, you're a money manager, you have to be invested. There's no emotion. It's not your money. You're going to take your money and you're going to put it in U.S. Treasuries because they're safe. And you know that if the government starts to kind of play around with quantitative easing, quantitative tightening, if the U.S. government starts to raise interest rates, you know the dollar's only going to get stronger. And whatever you earn in the bonds, doesn't matter. You're going to earn more when you sell it back to your currency. The Mexican peso is trading at almost 21 pesos per dollar. It was 12 and a half the last time not the last time, but one of the early times I visited Mexico. So imagine if you bought bonds, and we'll say 15 pesos per dollar. You know, your bonds, it's fine. They paid a dividend, they paid your interest, it was great, you made a little money coming in. Every quarter, every 6 months, money's coming in. And then at the end you went to sell it. And your $1,000 worth of your 1,000 pesos, you now get 1,500. So you made 50% of your money. You love it. The euro, you bought bonds at 120. You sell them now at $1 at an even euro dollar. You love it. You made 20% on your bonds. 25% if you do the math right. So, of course, if you think the dollar is going to strengthen, you want to convert everything into just U.S. dollar safe investments. If you could pump your deposits into U.S. banks, you would do it. Problem is it's FDIC insured, but there's restrictions. So again, we're going to take a look at some key portfolios here pre-market. Not much movement. The walking wounded, down. The banks, down. Money managers, down. Specialty retail, some furniture, mostly down. Alibaba's up. You know, somebody leaked out that Bridgewater Associates owns Alibaba stock. I'm sure that's worth $1 to the stock price. Crypto and physical mining, way down. Way down. Lay down, Sally. Cannabis and tobacco, mixed. There's some up, some down. Maybe some of them are going to benefit from inflation, right? You pay more for your doobie. That's interesting. Nvidia and AMD are up, so some of the larger tech is up. By the way, our model loves Nvidia. Loves Qualcomm too. Trucking and transport, down. So, good luck today in the markets. I think it's a crap sandwich. I think we are in a bear market. We are suffering through a bear market, through a terrible bear market. And every time that we're reminded of how bad it is, like, oh, inflation, oh, interest rates, oh, trade deficit, oh, war with Russia, oh, poverty, oh, crime is up, shootings, mass shootings in your own neighborhood, Jeffrey. You're reminded. And so what happens is you draw this is the S&P 500 futures. You draw your little channel. This channel started in November of last year. And you see just like clockwork. Oh, look at that. Coming down the channel. It's like sailing a boat down to Mississippi. It's going. It's going. There's no question here. Market's dropping. The only question is, are you long or are you short? Are you making more money? Are you working your tail off in your job? Or did you just buy a bunch of meme stocks and pray? Right? I don't know. You know, for the first time, we are actively shorting and betting against stocks. Because I don't think this is getting better anytime soon. So, thank you for watching. Appreciate it. We did not share our picks, but we did share some of the insights from our model, some of the volatility insights. And so if you really want to know what our model picked, give me a call. We have a 50% sale, save 50% coupon code for our website through today, close of business. We are off for a week next week. We're going traveling. So, and if you like the video, hit subscribe. Leave a comment. Love that. We'll respond to your comments. And good luck in the trading out there. I hope I'm wrong. I hope the market pops back up and everyone gets rich. But for right now, we're pretty pessimistic. All right, thanks again. Bye bye.